Maybe I walk off too far. Anyway, I guess we're waiting for Giorgio. I think Tana has to be out today.
Savannah's on her way.
Savannah?
Maybe a little late.
Yeah, she missed the other day. Still one more. Who's the other one? Giorgio, Tana, Savannah, one more. Kevin. All right. Kevin, the Haven, I think. Okay, of course, we did taxes last night. Have you got your 5 done yet, Tracy?
Yeah, I have that one that's rejected.
Huh?
I have one that's rejected.
Have you tried to fix it?
It says that the employee ID number is not the same. I've taken it out, put it back in. That's what I was telling you. It was a Virginia agency. It was a Virginia company.
Well, did you put in the correct employer ID?
It was correct to begin with.
It still won't take it? All right. Whose return is it?
It's a guy that I work with.
You'll have to give him a paper copy, let him mail it.
Okay, you told me that you were trying to send it back through.
We should have if it was completed and so on. After class, I will check. Okay, check it out. But anyway, we're doing about 40 a night. Had a good turnout to help prepare. In fact, they 2 or 3 inches. They did front last night helping out this and that. Students are learning a whole lot about West Virginia tax and all those credits. I guess the worst thing we come across, somebody, Robert back there, had a 1099 cube. I had never seen a cube before, but taxpayer has it in there. And it has something to do, it was an education fund, maybe his daddy or somebody, and he withdrew it, and he didn't withdraw it for educational purpose. And once you do that, it's like an IRA. If you withdraw it before you're 59 and a half, IRS charges you a 10% penalty. And a 10% penalty on his gain. I think it paid like 9,000 for it. He had a gain of 7,000. It was worth 16 when they took it out. But he pays a penalty, I guess, on the gain. But anyway, I guess taxpayer calculate that. But other than that, West Virginia students are getting used to credit for seniors or public employee or the military. But the worst thing any of them has is 2 states. So many of these people live in Virginia, they work in West Virginia, and they take out West Virginia taxes. So you got to pay Virginia and get all your West Virginia taxes back, and then vice versa. But most employers, and we had one last night, where an employer put both states on one W-2. Put both states, both IDs, both deductions. Do you have that one, Kate? But all you had to do is do the 2 states, right? But
Didn't have to pay in Virginia or West Virginia.
you never paying either one?
No, I mean, he got a very, very, very small refund for Virginia, but he didn't have to pay anything.
Oh, okay.
But he said that was normal. Sarah told me he would have to pay in Virginia, but he said normally he doesn't.
Well, we had 2 abnormal things that show up last night. 2 little ladies from security. I asked where they were security at, Princeton School. And I said, can you carry a gun? They said, no. I said, what can you do then if a shooter comes in? She said, all they can do is try to create some kind of diversion. If that shooter mine off the kid or something, I don't know. What would you do? Throw a box on his head or what? I don't know. But security guard without a gun is no more than a janitor or a coach there without a gun. Okay? But anyway, those 2 little ladies both had special situations. We'd done the return a week or 2 ago. Well, one she did her own amended West Virginia return. Savannah had done that return, and Savannah showed that she put $650 state taxes withheld. State taxes withheld. Okay. And it didn't take it. I had her to erase it, but again, it took it. And it showed the woman owed $28. That's what she calculated with her own amended West Virginia return. But that's a glitch in the program. Okay. The other lady, I forget who did her return, but it was something other about the health care. It was penalizing her $750 on the health care when the woman had health care all year long. So be careful when you check those health care boxes. I like it when it just says yes or no. That health care, yes, and then you go on, that's it. But this taxpayer asked you, how many questions? A bunch of questions on health care.
You know, where they purchase it, who all has it, did they have it all 12 months?
They asked a lot of questions to me, but TurboTax said me yes or no. Okay, so that's a couple of points. So be careful of those things. Now Tracy's got a situation whereas she's putting it to Virginia. I know when I was working on my Virginia return, it's on TurboTax that I had the wrong employer. Well, I looked at my old employer ID and I knew when they were different. So Virginia must have changed some employer ID number. But Tracy, she's copied the one off the W-2 form and it's rejected. So if it won't e-file it, then it's going to have to do a paper return. Okay. So we come up with little situations. But if you take 40 people that we've done taxes for, and some of you did some at home before you got there, even last night, an average of 300 a return, that's $12,000 we're saving the community, and most of them are older folks. We get some students and so forth. But anyway, different situations come up. Now, on those 1099 distributions, this came up last night, I've had it come up on some returns I've done. It will show you the gross distribution and federal tax withheld. Then it gets down and it gives you the state, Virginia, and ID number. So forth, we're all okay. But it has nothing over here in the Virginia distribution box. Just type in whatever it has for gross distribution. For Virginia or West Virginia for the tax, whatever the gross is. May not be in that box, but type it in anyway, so let you continue. So we have those little glitches that show up, okay, we have to handle. All right. VITA is, they used to send me a bunch of these books. They sent me the EZ and they sent me the 1048 and the 1040. But here is the best book. We're doing this personal tax at home for me. Now, this book, now in your textbook, if somebody made $100,000 worth of income, we get down to their taxable income, right? And we multiply it by percent and so forth. But they do have tables. It goes up to 99,000, goes up to 100, okay? And this book for somebody making 87,000. Now, first off, you would look at joint, separate, or head of household. All right, for 87,000, you got joint, separate, single, head of household. And if he made a flat $87,000 single, he'd pay $17,000 something in tax. So you do have tables up to 100,000. These tables are built into tax slavery, TurboTax, because it calculates the tax. We're doing manual, having this will make taxes easier to calculate with those percentages in the book. I think the book even has the tables back with right date in a year. All right, and this is just an overview. For those of you I gave publication 17 has a whole lot more than this does in it, okay? This is what you used to get in the mail. blank forms for you to do your personal taxes and mail them in. That's what everybody used to get to make. Or a 1040A or 1040 EC, whichever you filed last year. Okay, now that brings us up to test time. Let me give you the information you need to do a test. All right? And it's going to show up, so everybody will have a chance. Like we did last night. Okay, so I'm giving you a take-home test, and I expect you to work on it along, and I won't have you to write any oaths or anything. I swore on my line so that I did not give or receive help on this test. All right. I have to work on this period. Bring it back to this. All right. I want each of you to look at a question, but I don't want you to answer. Alex, look at 1, and Tracy 2, and Taylor 3, and Austin 4, and Robert 5, Olivia 6, and Giorgio 7, and Kevin 8. So each of you look at those questions I just mentioned. All right, Alex, you've read that one. Can you answer that with 100% certainty? All right, read number 1 with Alex. On its return, the corporation will use the same depreciation, amortization, and depletion methods used on its financial statements issued to shareholders. So it's saying they use the same thing for IRS as they use for their corporate books. So that is 100% yes or no, and there's no in between. Crazy. How about number 2? In order to be for an asset to be depreciated in the year of purchase, it must be placed in service before the end of that year. Can you answer that with 100% certainty? Good. I hope so. Okay. Kayla, land, buildings, equipment, and common stock are examples of tangible property. Can you answer that with 100% certainty? I hope so. Okay. So far, Alex, we've had 3 easy questions. Okay, Austin, if personal use property is converted to trade or business use, the basis for depreciation is the lesser of adjusted basis or fair market value on the date of conversion. Can you answer that with 100% certainty? Huh? And you should. You should. Okay. But you do have open book in case you have to look it up. Okay, number 5, under MACRS, depreciation rates for real property must always use the mid-month convention in the year of acquisition. Number 5, who had that, Robert? Could you answer that with certainty? I think so. I think everybody can on that one. And Olivia, number 6, under MACRS, tangible personal property used in trade or business, put the service on March 2015 should be depreciated for 10 months in 2015. Assume the business uses the calendar tax year and no other tangible personal property is acquired during the year. It says they should depreciate for 10 months. Now, if you answer that one, Olivia was 100% certain. Good, you should. All right, Georgia, number 7. MACRS recovery property includes tangible, personal, and real property that is used in a trade or business. Take an answer that 100%. Okay. And then Kevin, number 8. Under MACRS, automobiles and computers are classified That's 7-year property. Can you answer that 100% certain? You should be able to. It's open book. Okay. Just showing you how easy it is. There should not be a grade in here on this first team. Take home a long weekend. There should not be a grade under 92. All right? So I'm challenging everyone to not miss more than 4. If you're 92 or better, okay? Should not be a grade under 92. All right, so that's your test. Okay, I feel like we've looked at depreciation pretty decent, but there's a few other on depreciation we'll take a look at. I don't think we looked at amortization. So let's turn to your problems in chapter 10. Somewhere on or about page 31, 32. I'm not going to give you a comprehensive problem yet, or tax return problem yet on this chapter, because you got this test coming up. We've had VITA. So this is the only test you'll have for midterm. If nobody makes under 92, then there'll be no D's or F's to turn in midterm. Okay. All right. Most of you will agree, hands-on with VITA. Even also, he only had to do 5. Tracy only had to do 5. Alex only has to do 5. But Alex has done taxes for how many years? You did taxes last year, right? Did you do the whole return? Yeah. So he has had experience doing taxes. Now, Michael is doing his internship for CPA, and the CPA got him doing tax return. And he's done a lot. Now, the prices that CPA charge, you took in one W-2, and you're saying on the CPA done it, Michael said you charge $49. That's a lot better than H&R. I believe H&R Block will charge a minimum of $200. And Michael said they did a simple itemized deduction, they charged $199. Okay. But anyway, it is a good experience. I know Michael and Savannah, next year, they'll probably purchase TurboTax or Tax Cut or something. And I look for them to even make a business card. And they've done a lot for friends and relatives this year. But next year, do the same friends and relatives, but charge. Okay. Charge about half as much as H&R Block. H&R Block charge $200, charge $100. Build up some clients. And you can make money on the side. Okay. But I could probably do a corporate return in an hour, and I would charge $600. We do an itemized deduction in 10 minutes and charge $200. So anyway, don't feel bad if you make $200 an hour, okay, if you do taxes. All right. If you did 2 itemized deductions in 1 hour and charge $100 a piece, that's $200 an hour. Got to be a lot of money in there. H&R Block wouldn't do it, would they? And Liberty Tax wouldn't have somebody dressed up in a stupid statue outfit standing out on the street waving something. And that person I'd like to run over, but I won't. That is a tacky way to get customers or clients. Okay, what is the last problem we covered the other day on page 33? All right, let's go ahead and look at number 38. That's an even problem. I want us to look at that luxury automobile real quick. Anyway, something may have changed on tuition deduction on, I remember the tuition deduction on the front of your 1040 as an adjustment. I think your limit's 2,500. I thought it was always 2,500, but I did my own sewer taxes the other day, and he's got a lot of rental property and so on. He said use depreciation, but anyway, he had a lot of student loan interest, and it takes your adjusted gross income and reduces. So we didn't get a whole lot of student loan interest because of his AGI. I didn't remember our book teaching us to do that. Let's look back to see. Okay. So if you have student loan interest on a return, it may not give them the whole 2,500 if they paid even out $10,000. 2,500 is all they get anyway. May not give them all that. Go to the ring. Okay, so read number 38. All right, this company acquires 100% business use automobile, 5-year recovery period for $32,000. The company did not elect 179 expenses and elects out of bonus depreciation. What is depreciation for 17 and 19 and subsequent years? All right. Okay, look at MACRS recovery period for 5 years. All right, 20%, 32, 0.19, 0.11, 0.11, 0.05. This is your regular table, no tricks. All right. So how much is depreciation? 60 what? 6,400, right? But what is your limitation in the tables? You look at the luxury automobile tables and the limitation is 31.6. So what do you get? 31.6. And here, 32% is 10,240. But they only allow 5,100. That's what you get. Over here, depreciation is 61. They only get 3,000. 36, they only get 18. 36, they only get 18. That looks like about half. And 18, 4, 18, 43. Your limit is 1875. You take the lower of the two. Okay. So that's just looking at a luxury automobile. And they got a definition of a luxury automobile. Okay. All right, look down at number 40. And we're going to look at number 40 and maybe glance at the table. And number 40, we got a similar situation, but we got the 20, the 32, 19, 11, 11, 5. So we got 7,200, but the ceiling limit is, now why are you only getting 70% of even the ceiling? So take 70% of 3160, probably should be 2212. Why only get 70%? Well, let's read the problem and find out.
Because he used it 70% of the time for only business and 30% for personal use.
30% personal?
Yeah.
So this is your business deduction for 100%. This is your business deduction for 70%. Okay, same thing all the way down to here, 70%. 70% of what is allowed. You get down here, no matter what it costs, you get down here to 1875 for the last 4 years. I don't know how long these taxes last or limits on luxury automobiles, but best thing is buy a vehicle for your business that's not considered a luxury automobile, and you're going to take 100%. Yeah. All right, we're gonna look at amortization, number 42. All right, on January, Palm Corporation purchased the net assets of Vicky for $600,000. The tangible assets have a $300,000 book value and a $400,000 fair market value. The purchase agreement states that Vicky will not compete. There's a covenant not to compete. All right. The stated consideration received by Vicky for the covenant not to compete is $50,000. Other intangible assets included the purchase agreement are goodwill. You bought goodwill, patents, customer list, and there's Vicky's covenant not to compete for $50,000. How would Vicky's assets be recorded for tax purposes by the new corporation? Now, let's just make it a journal entry. You record them at fair market value, of course. Did we make it?
Yeah, running late as usual.
Okay, Savannah, your test is back there.
Yeah, I see it.
I'll tell you my observation after class.
Oh, Lord.
I can't tell the whole class what I observed about you, so I have to tell you personally. Okay, now number 42. Tangible assets. All right, a patent, you know what that's for. Customer list, I mentioned, there's too many customer lists floating around. And, you know, I guess if Target was hacked one time, you know, you might get credit card numbers and everything else, but you got a customer list. You got customers and addresses, you can sell those lists to other people. Okay? Anyway, goodwill, patents. Now, Giorgio, I'm gonna ask you, if you haven't been around in the States as much as other people, what's goodwill?
Goodwill is the reputation that a company earns over time.
Well, if a company is worth 100, you give 120, you're paying 20,000 for the reputation. Yes. Or location, or established business, or somebody else took the risk, or whatever, yes, okay. And sometimes it's got more value than what's appraised at. So the total 600. Now, I want you to look at the years of these things. Amortization for a covenant not to compete, $50,000 is 15 years. Goodwill is 15 years. Patent is 15 years. But now, even though the remaining legal life is only 12 years, I disagree with that because before MHRS came along, it was the lesser of the two. For book purposes, then you'd have to use 12 years, and for tax purposes, you'd have to use 15. I disagree with that because it used to be the lesser of the two. Customer's list is also 15 years, okay? And of course, it gives you the page and so forth, 17, 19. So 15 years, that makes it easy, don't it? Okay, is there a depletion? We got to look at least one depletion. I'm going to look at number 44 real quick on R&D. If the expensing method is elected, Phoenix deduction for R&E is the whole amount. All right, 40 and 80 and 30 and 20. All right, depreciation is 32,000. Let's see, I'm trying to look. 32% of 100. But now, second part, if the deferral or amortization method is elected and the amortization period is 60 months, there would be no amortization allowed in 2017, but there'd be 34,018. So in the first year, you elect to amortize over 60 months R&D expenses, there is no depreciation whatsoever in the first year. But you're gonna divide by 5 years or 60 months. We know 60 months is 5 years. I just divide by 5 years instead of 60 months times 12. All right, I wanted to do number, I'm gonna let you take a minute, read number 46 and do some calculations on it. Read 46 and do a few calculations. Okay, let's look at these real quick. I don't know if it's the best example in the world, but it's the only one we got on cost depletion. Now, you have estimated recoverable units, 20,000 units produced this year. If this were a coal mine, 6,000 you mined. And we got to know what it is. It's gas property, pounds or whatever it's measured in. We bought it for 200,000. All right. Estimated recoverable units. I don't know, that's pounds, whatever it's measured in. But if we divided 20 into 200, what would that give us? How much? $10 a unit. Now, if we sell 4,000, what is 10 times 4,000? That'd be 40. So hold on to that and let's see what we have. I just calculated simple depreciation as you knew it, and that's what we have here. 200,000 divided by 20, multiplied by 4. That's your depletion. Now, that's the units of production method of depreciation. Okay, same thing as depletion by the cost method. Now, if IDCs are capitalized, the cost depletion amount is 44. The basis for cost depletion would be 220. All right, 220 divided by 20. That'd probably be 11. 11 times 4 would be 44. No less, no more. That reminded me of an epitaph I saw on a tombstone. This was on a tombstone. Realized Lester Moore shot with a 44. No less, no more. Okay. All right. Okay, now the percentage depletion would have been what? How much would the percentage depletion be? for gas and oil, they had a percent in there, but percentage depletion after limitation, 25,000. So what's the best, 25,000 or 44? Okay, the greater of cost depletion or percentage depletion not to exceed 100% of taxable income. Therefore, cost depletion of 44 is deducted if the IDCs are capitalized and 40,000 if the IDCs are expensed. All right, what are these IDCs? That's some kind of intangible drilling cost?
Yes.
Okay. But anyway, so you can add them on to the 200 or not, depending. But cost depletion. Now, under cost depletion, not to exceed 100% of taxable income. If taxable income is only 35,000, then what's your depletion? 35,000. If taxable income is 30,000, what is your depletion? 30,000. You can only take depletion, cost depletion, up to net income. All right, you probably should look at number 40, 47. But I think you have enough now behind you to do okay on the test. Now, the questions you saw that we went over 8 beginning of class was all depreciation. But you still had another chapter, which was credits. Now, from doing BITA, passing that test on BITA, and these credits, now the only one I'm feeling guilty about is AGM. You know, child care credit, you know, earned income credit. You can easily look up that work opportunity credit and energy credit, credit for the elder, but the AMT tax credit. All right, you probably need to review those 3 or 4 pages. Do the best you can with those. I believe there's about 4 questions. I'll probably throw 2 of them out or something because I didn't get over there. Okay. But do the best you can with it because we've got to start another chapter. And let's look at page 11.2. First little section is accounting periods. Now we normally think in accounting of calendar year or fiscal year. And what is a fiscal year? As long as it runs 12 months, March 31st to April the 1st, whatever. April the 1st to March 31st. As long as it's 12 months, it's a calendar year we know is you as a taxpayer. January 1, December 31. All right. But in taxes, there can be a short period. What if you started a corporation in the middle of December and you wanted a calendar year? Do you file a tax return for 2 weeks? All right. So we'll bring out those details and so forth as we go. I don't see it here, but that is a question we got to answer. I wanted to find that somewhere. Anyway, look at page 11.4. Look at example 4. ABC partnership begins operation in October and elects a September 30th year end under section 4440. The partnership's net income for the fiscal year ended September is $100,000. ABC must make a required payment of $10,150 on before April the 15th. This is a partnership. I don't know why they have to make a required payment. That is not a good example. Partnership does not pay taxes whatsoever. Keep that in mind. We'll sort this out later. Partnership does not, but the owners do. Now, if you're ever in a partnership, don't have it ended on September the 30th. All right? because you would get your income from that partnership on September the 30th. That was from last September the 30th. And you add it to your W-2 wages of December 31st. And it can get confusing, but have the same calendar year as the taxpayers do if you ever form a partnership. Even a sub-S. Corporation, it doesn't matter. But a partnership, a sub-S, and an LLC, I would do the same as the taxpayer to keep down any problem. All right, changes in accounting periods. Okay, calendar year, fiscal year, that's the two biggest. A short year, you know, if you start a corporation 1st of October, yeah, you can file a 2-month tax return. Going back to that question that I brought a minute ago, if I started a corporation middle of December, then I would be filing a return for 12 and a half months. I would not file a tax return for 2 weeks. I would just add it on to the next year. So that's permissible. I don't know how many weeks, but it is permissible. Okay, now what if you are calendar year and you want to change to fiscal, or you're fiscal and you want to change to calendar? Look at page 5 for the condition, the bullet. A newly married person may change tax year to conform to that of his or her spouse. Well, why would that person be different anyway? That's like Savannah getting married, hopefully, before she's 90. Anyway, that's like her getting married. She's on a calendar year, and her husband was on fiscal year for September. There's no reason for an individual to be on a fiscal year. May happen, but there's no reason.
Why would they choose to be on this?
I have no idea why an individual wants to be on fiscal year. I have no idea. We may run across the example. I don't know. The next bullet, a change to a 52, 53 week year that ends with reference to the same calendar, what have you. But they do mention a 53 week year here. A taxpayer who in error files tax return using an accounting period other than that, you know, that's our body, people. You might have filed one in error using the fiscal year, not the calendar year. Savannah, I was giving them the situation where you put down that lady's state taxes in tax layer and didn't pick it up. That was a glitch. And she's the one that did her own and amended return for West Virginia. And the other little lady, I had never met them before in my life, but they were security guards, and one was about 62, just white-headed, and the other was probably about 55. And so the white-headed one asked, she said, why did I get back more than she did? I said, because you're pretty. I had to have an answer. They were both standing there. She laughed. And the young one said, well, that is true. She's pretty than I am. I'm just kidding those ladies. I said, how was your income compared? She said, well, she makes more than I do. But you can't compare. Now, it was an orange. She made 30,000, you made 20,000. Naturally, taxes are different. You get back more or less. It depends on what was withheld, your spending. Now, who has gotten a paycheck in February? Okay, Robert, was your paycheck bigger? Now you work for grants. Do you have them? Do they withhold federal income tax on you? And your paycheck in February was no bigger than January? Couple of dollars? Mine's automatic deposit. I didn't look it up yesterday. Mine was $50 per payday, more than last year or in January. So $50 per payday, that's 2 paydays a month. 12 months, 24. That's $50. So I'll gain $1,200, but it's new tax law. As of now, don't know what it will look like when I do 2018 taxes. But Robert, you only gained a couple dollars a payday?
They check this out.
Was what?
The state check was less, but I did.
Oh, okay, so your hours are not consistent, so again, yeah, that's comparing apples to oranges, to apples to apples. I compare apples to apples, but my paycheck's always the same. Okay, yeah, depending on the hours worked, it'd be hard to tell. All right, well, hopefully people have started seeing raises. Now, the new law says that it's dead in 2025. So it's good for 7 years. Now, if the economy is good in 7 years and the national budget is okay in 7 years, they'll let that continue. If not, they'll revert back to what we got today. Okay, for 2017 tax. It's good for 7 years. That's why you keep hearing it's temporary. I think it'd be permanent, but right now it's temporary. Another situation that came up last night, like Georgia. Georgia is a student in this country. Now, what do you have, a student visa? Yes. All right, but to work in this country, you got a social security number, right? And you got a driver's license in this country, right? But, oh yeah, but you could. So if he works under that social security number, they're gonna withhold taxes on him. So he files just like you or I do. He gets back a refund or he pays. Okay? Now there was no big deduction. Now, some little man came in, he thought how much let's do his return here. But I guess he was from some country in Africa. And she gave him an appointment. But he came in and says, when I deduct all this money that I had to talk to the father to understand what he was talking about. But he sent the money back home to Africa. And he wondered if he's taxed on that money, he sent it back to Africa. Why, sure. You know, he made it in this country, he's going to be taxed on it. So send the money back to Africa. Now, if it was alimony, he would send it back to a wife in Africa. And we could deduct that as an adjustment. But it's just sending the family back money to tax on it. So, but we have a lot of that. Now, Giorgio's friend, Nacho, he worked somewhere this summer at tennis game. He coached and he tutored. They gave him a 1099. Now, a 1099 miscellaneous. Now, one of the major things with a 1099 miscellaneous, put it on Schedule C and call it contract labor and pay Social Security taxes on it and federal tax. Not a lot of other choices. But now, if you didn't want to pay that Social Security tax on it, now, Nacho will probably never live in this country. Let's say he don't. He'll never draw Social Security in this country. He goes back home to Spain, he won't go on Social Security. So I was trying to think of a way if you could put that down. You might put it down on other, but I don't know what you would call it. Put it down on other income. Call it something. They call it something truthful, but where it looks like it's not contract labor, we're going to have to pay Social Security tax. Okay.
I'm confused. Is Nacho a person?
Yeah.
Yeah.
Okay,
It's like you-
okay.
I had him in accounting, and is that his real name? Nacho?
No, that's not his real.
Yeah, I know, we nicknamed him that, like his principal saying,
Okay.
man, girl, he's from Spain.
Well, we didn't know. We were kind of,
You ever met Nacho?
no.
Never met him?
I looked at Caitlin and said, what's an Nacho?
Well,
I mean, like, we're a little confused over here.
y'all got a big Nacho. He's a nice girl. Almost as nice as Georgia. Okay. Okay, so we're getting off on these little tidbits as they come up. Can't help that. All right, return for a period less than 12 months. That's what it will give you. Now, there is no way that I'd want you to change your personal return from a calendar year to a fiscal year. If you do, then you do have to prorate exemption. And you do have to prorate standard deduction. I don't want you to ever have to get into that. Now, we know if you marry somebody on December 31st, you get a full 100% exemption. If you have a baby on December 31st, you get 4,000 something exemption. All right. If your husband dies on January the 1st, you get a mandatory return. He's exemption for the whole year. You don't prorate. But when you start changing these years, you may have to prorate. And that's what next couple of pages are telling. All right, now, there's two methods of accounting, main methods. There's a hybrid method. Now, what have you learned in accounting, Tracy? The two accounting methods.
Yes.
All right, accrual and cash. Now, cash is what we're on. All these tax returns we're doing, everybody's on the cash basis. All right, if you were itemized deductions, you don't take down the expenses that they owe for. You take down expenses they pay for. Okay. Now you know the accrual basis of accounting. What does the accrual basis of accounting mean, Alex?
You record revenue when you're.
All right, you don't have the money in your pocket, but if you earned it, if it's owed to you, you count it, accounts receivable, whatever. And in intermediate accounting or somewhere, you should have different methods. Accounting revenue, whether it's completed contract, percent of completion, or whatever methods. We have to find some method to account revenue. Okay, so accrual basis, those seem pretty good in accounting. So what you learned in accounting, let's add on to that, because some things IRS does not accept what accounting does. Okay, you gotta look at those exceptions. Now they have a hybrid method. This is an easy hybrid method. If you're in merchandise, this counts all your accounts receivables and payables is accrual, but everything else is cash. You can do that if you're in merchandise business. Your accounts receivable for merchandise sold, your accounts payable for inventory bought, and B, the accrual, everything else will be cash. So that's one thing in this chapter I'll point out to you now. But prepaid expenses. What if you prepay rent? Let's say you're going to pay 3 years lease in advance, $10,000 a year. That's $30,000. You're going to take the cash basis taxpayer to take that whole $30,000 off because you're paying. IRS probably says no. How about the person receiving that $30,000? Rental income. Do they have to report it on the cash basis? Do they have to report it on the accrual basis? Okay, so let's look at those exceptions. Okay, they mentioned the accrual basis on page 9. Your economic performance test, all advanced tests. You all have had this enough in accounting. You know what the accrual basis is. If you go down and look at the bullets on page 9, the all advanced test without regards to economic performance is satisfied. The requirements that economic performance take place before a deduction is allowed is waived if all these conditions are met. You can read those, but you usually don't need those conditions. All right, now the hybrid method on page 10, I've already told you about it. Taxpayers may use a combination of accounting methods as long as income is clearly reflected. Taxpayers with inventories are required to use the accrual method to report sales and purchase, accounts receivable and payable. And you can use cash basis for everything else. That's what I've told you. Okay. You know, I did taxes for a lot of truckers at one time when I had a tax business, and they were on a cash basis. And they would go out and buy those truck tires. They're ridiculous price, around 500, and they'd buy 20 of those, just put them in their warehouse. But that was a $10,000 deduction to take off of their taxes in that year. They're on a cash basis. They won't use the tires probably for a year, but they would do that to lower their tax bill. Okay, inventories. Now, inventories, I don't know. You may have gotten into it in intermediate. When is inventory yours? When do you count inventory? Definitely if you go out and buy it and you bring it to your warehouse. But is it your inventory if it's FOB shipping point? Or is it your inventory if it's FOB destination? Which one? It's going to be your inventory. But this is December 31st, and you've got inventory, FOB destination. It hasn't arrived yet. Do you count it?
No.
No. But if it's FOB shipping point, would you count it? Yes. Okay. But inventory, let's see what it says here. In general, manufacturing and merchandising companies are required to use the accrual method of accounting for purchases and sales of merchandise. That's the hybrid method. Okay? But you can read that. If there's anything important, we'll mention it later. And determine inventory cost, that's why I asked you that question. All right. Now they mentioned inventory with LIFO. You know what LIFO means, and so on. We'll need to look at that later probably. They mentioned lower cost or market, and they mentioned cycle inventory valuation. Okay. Now that is accrual basis versus cash basis. Okay, on page 16, I'm not going to get into these. Is that long-term contract method? And is the percentage of completion method? So you may have had those in intermediate, but we're going to review them in taxes, and they're the same thing as they were in intermediate. But now, the installment sales method. What do you sell on the installment plan? A house is a mortgage. What do you sell on the installment? Possibly. Installment. All right. But I want to explain this more to real estate. Okay, you paid $10,000 for a half-acre lot, and you sold it for $30,000. How much gain did you have? All right, but you're going to take payments. You sold it for $30,000, but you're going to take $3,000 a year for 10 years. That's the installment plan. That's what this is talking about. Installment. Now, how much of that installment each year is gross profit? How much of it is cost? Now, I guess furniture will be sold on installment plan, TVs and that sort. Okay. There's a special form for the installment plan, and you must use that special form. And we will look at it. And we'll have to look at repos or repossessions. All right, inputted interest. Look at page 29. And we're not going to do much more for this chapter today because you're going to concentrate on the tax test first. But when you get around to it, read this chapter. Inputted interest. You can think of that in two different ways. One, you sold something for $100,000. You pay payment, $20,000 a year for 5 years. interest is already in there. You gotta find out what you would have paid cash, using present value tables or whatever. What would you have paid cash for that piece of equipment? Could have paid 92,000 cash, and it has 8,000 and put it interest on. Okay, and even bonds sold at a discounted premium. But first off, installment sales, page 29. All right, you bring it up to date. This was a piece of equipment. And then, of course, what did we sell this piece of equipment for? 200,000. All right, what was the cost of this equipment? We got to find its basis. First off, is there a mortgage on this piece of equipment? Looks like 50. All right, so you're really getting 150. Your cost was 70. Depreciation allowed was 10, so your basis is 60. Your basis is 60. All right, commissions and other expenses. If you paid real estate agent a $13,000 commission, then there was income recapture from $47.97. That was some kind of extra you had taken off. $47.97 is recaptured depreciation. You pay taxes on it. So really, 13 is 83,000. That's the 60, plus the commissions. And of course, you cleared 117. But now if you go down to 18, your contract price was 150. Okay. Now your gross profit percentage, divide line 16, that's 117, your sale that you cleared, divide by 18 your cost. All right, so your cost is 78%. And your gross profit is 22%. So let's see. Oh, your income, I'm sorry, is 78%. 78% of 10,000 will be 7,800 gross profit. And the 22% was cost. 78 gross profit. So this is installment sales contract. And if you were selling a piece of land and financing it for that person, this is what you would do. Okay. Installment sales contract. Okay, I'm gonna let it go at that and call it a day. Y'all have a good weekend. Good luck on that test. Don't help anyone. They should not need any help. Remember, if you help a person cheat, you are cheating that person. That makes sense, Kevin? If you help a person cheat, you are cheating that person. You are doing evil and wrong for that person. Okay, see y'all later. I guess nobody was absent today but Tanda, doing all this recording just for